Ever wondered why, whenever there's turmoil in the world, the US economy seems to hold steady or even strengthen? It's a complex and fascinating topic, and today we're going to break it down. We'll explore how geopolitical tensions, like the ones we see brewing today, can paradoxically create significant financial benefits for the United States. We'll look at everything from safe haven investments to the prices of gold and silver, and we'll even run the numbers to estimate just how much we're talking about. So, let's start with a core concept: safe haven demand. When conflicts or crises erupt anywhere in the world, global investors get nervous. They start looking for the safest place to park their money to protect it from volatility. And for decades, the go-to safe haven has been the United States. U.S. Treasury bonds, U.S. stocks, and the U.S. dollar itself are all seen as the most secure assets on the planet. This massive inflow of capital does two things. First, it props up the value of the U.S. dollar, keeping it strong against other currencies. Second, it strengthens the overall financial position of the United States. Think of it as a global vote of confidence in the U.S. market, happening precisely when the rest of the world feels uncertain. This isn't just a theory, it's a pattern we see time and time again. As global tensions rise, so does the demand for American assets. Now, let's talk about something shiny: gold and silver. These precious metals are the original safe haven assets, and their prices almost always spike during times of global instability. As I'm recording this, gold is trading around an incredible $5,278 an ounce, and silver is hovering near $94 an ounce. So, how does this benefit the US? Well, the United States is a major producer of both gold and silver. When international prices for these metals shoot up, American mining companies see their revenues and profits soar. It's a direct financial windfall. But the benefit doesn't stop there. Many investors don't buy physical gold bars. Instead, they buy gold and silver ETFs, exchange-traded funds, or futures contracts on U.S. exchanges like COMEX. This activity injects a massive amount of liquidity, or cash, directly into the U.S. financial markets, further bolstering the system. This brings us to the strength of the U.S. dollar. As we mentioned, during a crisis, everyone wants dollars. Foreign investors, corporations, and even central banks rush to buy U.S. dollars to safeguard their assets. This huge global demand keeps the dollar strong. A strong dollar means that imported goods become cheaper for American consumers. It also makes it easier for the U.S. government and American companies to borrow money, as there's a global appetite for dollar-denominated debt. This isn't a small thing. It's a fundamental pillar of America's economic power on the world stage. And that power translates directly into geopolitical leverage. When the world runs on your currency and relies on your markets for safety, you have a tremendous amount of influence. The United States can leverage this financial dominance in foreign policy negotiations and trade deals. Other countries know their economic stability is often linked to the health of the dollar and access to U.S. markets, which gives the U.S. a powerful bargaining chip that goes far beyond military might. So let's recap the key mechanisms. During geopolitical tension, the demand for safe haven assets drives a flood of investment into the U.S. Gold and silver prices rise, generating huge profits for American mining companies and financial firms. The U.S. dollar strengthens, which benefits imports and borrowing. And all of this combines to give the U.S. significant geopolitical leverage. Now, let's get into the really interesting part. We've talked about the how, but let's quantify the how much. We've done some calculations to estimate the potential financial benefits for the U.S. in a scenario of heightened global tension, based on current production and prices. The numbers are staggering. Let's start with gold. The United States produces about 250 tons of gold annually. That's a little over 8 million ounces. At the current spot price of roughly $5,278 per ounce, the simple math is breathtaking. 8 million ounces times over $5,000 per ounce equals more than $42.4 billion. That's a potential $42 billion revenue stream just from gold mining, fueled by prices that are inflated by global fear and uncertainty. This is an immediate, tangible benefit that flows into the U.S. economy. Next up is silver. The U.S. produces around 50 million ounces of silver each year. At the current price of about $94 an ounce, the annual revenue comes out to $4.7 billion. But in a serious crisis, analysts believe silver could easily surge past $100 an ounce. If that happens, we're talking about 50 million ounces times $100, which equals a neat $5 billion. So, just from mining gold and silver, the U.S. is looking at a direct financial gain of nearly $50 billion. But the direct revenue from mining is only part of the story. The indirect benefits are just as significant, though a bit harder to calculate precisely. Let's think about those safe haven flows we talked about. Imagine international investors move just $100 billion into U.S. assets to protect their capital. This isn't an unrealistic number in a major global crisis, What does that $100 billion do? First, it increases the demand for the dollar, keeping it strong. Second, it allows the U.S. Treasury to issue debt at more favorable interest rates, saving the government money. Third, it lowers the relative cost of imports, which helps keep inflation in check for American consumers. And finally, it provides a massive liquidity boost to the entire U.S. financial system, keeping credit flowing and markets stable. While it's tricky to put an exact dollar figure on these indirect effects, a conservative estimate would place the value of these benefits somewhere in the range of $20 to $30 billion. This comes from the combined effects of cheaper borrowing, lower import costs, and the overall stabilizing impact on the economy. So let's add it all up. We have about $42.4 billion from gold mining. We have between $4.7 and $5 billion from silver mining. And we have a conservative estimate of $20 to $30 billion from the indirect benefits of safe haven flows and a strong dollar. When you combine these direct and indirect financial benefits, the total economic gain for the United States from a period of heightened geopolitical tension could be anywhere from $67 billion to $77 billion. Let that sink in. That's a massive economic stimulus package, delivered, ironically, by global instability. The key observations here are clear. Rising gold and silver prices are not just headlines. They translate into billions of dollars in profits for U.S. companies. The rush to safety during a crisis acts as a powerful endorsement of the U.S. dollar, reinforcing its status as the world's reserve currency. And this unique combination of factors strengthens America's economic and strategic position on the global stage, even as other parts of the world face turmoil. It's a stark reminder that in the complex world of global finance, one nation's crisis can become another's financial opportunity. This isn't about passing judgment, it's about understanding the deep structural mechanics of our interconnected world economy. The system is designed in a way that, in times of trouble, capital instinctively flows toward what it perceives as safety, and for now, that safety is still spelled USA. Thank you so much for watching this deep dive into a really complex topic. If you found this analysis insightful, please hit that like button and subscribe to the channel for more content like this. We love hearing from you, so drop your thoughts and questions in the comments below. Stay curious, and we'll see you in the next video.